What a year 2020 has been, but the risk landscape is ever continuing to change. And I'm going to give you just a brief oversight of the market from obviously what we're seeing here at Danos, and also kind of what the kind of contract market itself is looking like. Operational resilience we've definitely seen is high on the agenda, especially in the fintech space, as companies have continued to expand. FRTB, Fundamental Review of the Trading Book, regulation aiming to standardise the treatment of market risk, has been pushed obviously from January 2022 to 2023. So we foresee some further support needed to help with any further changes to help with maintaining this. There are still shortages in credit risk, especially candidates with strong knowledge of Basel III, and some of our larger banking group clients have brought in wholesale credit risk project teams to assist with these functions too. In Europe, demand for model development and model validation contractors still remains high across Amsterdam, the Nordics, and Eastern Europe. Rates will vary per location, but the shortage of permanent candidates for some of the team build-ups has meant there is a need from an interim perspective. Rates are being a little bit squeezed to enable contract supports to still be more cost-effective solution than larger consultancy support. Carrying on from a quantitative perspective, we've seen there's still quite a demand for candidates with experience across AIRB, IRB, the Advanced Internals Ratings Based approach as well. Interim investment risk market has been quite buoyant as clients have had short-term needs in this space. So they've brought in a few contractors to assist with acting as cover or the ever-growing workload. Further pressure to transition away from LIBOR as well has grown, which has continued to impact across the risk market. And also cyber security risk as well is one definitely worth keeping an eye on, as demands have picked up in this space just due to the ever-changing technological advances we're seeing. Some sectors, including private banking, struggled with the adjustment of home working due to concerns around the data privacy, but they're now working on new guidelines. So we're seeing new operational risk models have been under a lot of scrutiny as firms are adjusting to this home working situation, and we've seen a build out in operational risk functions to help this, where they've previously been tagged on to compliance roles as well. Asset management and pension space are definitely focused on developing their operational risk frameworks as well. So we've seen a lot of movement in that space too. Many factors, including the sector within financial services, the geographical location, or even the demand, can affect rates achieved by contractors. Rates have dropped a little at the senior end of the market, and home working and a tighter market has meant candidates have more flexible, a little bit more flexible with their expectations in the current climate too. There has been a bit of a push on fixed term contracts as well from clients due to budget constraints. The delay to IR35 implementation has resulted in some contractors being able to work through their limited company or carry on working through their limited company. Whilst critical permanent hires are still taking place, remote interim talent is being used to support functions during the global pandemic. The majority of the interim workforce remain flexible with regards to their payroll route to work. And we expect a mix of remote working and socially distanced office working to continue, obviously, as we go into 2021 as well. We can support you in your contract search if you're looking to hire. Also, please do let us know. So please feel free to reach out to myself or Catherine Lord at Danos Consulting for a more detailed conversation if we can help at all. Thanks.